SPX opened today at 7272296, sitting inside a positive gamma regime. Dealers pinned neatly against a wall at 70. Nice and calm. Here's the part nobody was looking at. By 11:35, that positive regime had already flipped negative total gamma exposure, crossing from plus 0.05 billion to minus 0.05 billion in under 2 hours. And it didn't drift back. By mid-afternoon, it was sitting at minus 0.1 billion negative for the rest of the session. A gamma flip isn't cosmetic, it's mechanical. When dealers hold positive gamma, their hedging dampens the tape. Buying dips, selling rallies, staying flat. Flip that sign negative, and the hedging runs the other direction. Sell into weakness, buy into strength, pushing price further in whatever direction it's already leaning. That's the tug of war. And today, the dealers lost the tug before lunch. Dealer Delta Net opened at negative 4.3 million and never once crossed back to positive all session. It deepened to negative 5.2 million by 11:35 and stayed short from there. The machine was running in one direction, not two. Consensus walked in expecting a non-event. SPY was up just 0.16% on the day, and the broader signal red called it a neutral macro backdrop with no major directional pressure anywhere in the tape. Today's stock-specific signals leaned for short setups against a single long, described in the data itself as company-specific noise rather than a broad rotation. Nobody was pricing a regime flip at the index level into their morning coffee. The setup was for boredom. At the 9:35 snapshot, the machine looked orderly. Total gamma exposure sat at plus 0.05 billion, a positive regime. With the zero gamma line up at 7,800 and the defended wall at 7,770. The implied move for the day priced in 34 points of range. Put-call volume ratio read 1.104. Open interest ratio 1.331, both landing squarely in neutral territory. On paper, everything about the open said pinned and calm. Dealers, though, were already net short 4.3 million in delta, leaning against the tape, even while the regime itself still read positive. By 10:35, the picture had softened but not broken. Total gamma exposure dropped to plus 0.03 billion, still positive but thinning. The zero gamma line ticked down to 77 to 90, while the wall itself held steady at 77.70. Implied move compressed to 26 points from 34. Dealer delta deepened again to negative 5.1 million. Spot ticked up slightly to 731.61. Everything about the tape said the positive regime was fraying at the edges, one snapshot before it broke outright. By 11:35, the tape says otherwise. Total gamma exposure crossed into negative territory at minus 0.05 billion. the zero gamma line, the boundary that even defines whether a regime is positive or negative, simply disappeared from the board, reading null for the rest of the day. Spot had drifted down to 77.50. Dealer positioning didn't ease off with it. Delta deepened to negative 5.2 million, the most short of the entire session. Whatever was holding the tape together at the open had come apart by lunchtime, and nothing about SPY's quiet 0.16% gave any warning it was coming. The bleeding continued into the afternoon. At 12:35, total gamma exposure widened to minus 0.07 billion. Spot down at 7706.96. Implied move down to 20 points. Dealer delta easing slightly to negative 3.9 million, but still firmly short. By 13:35, gamma exposure widened further to minus 0.13 billion, and the wall itself finally cracked, sliding from 7770 down to 7750. It slid again to 7740 by 14:35 and held there through the 15:35 close. A 30-point retreat from where the day began. The implied move followed the same path down. 15 points by 13:35, 12 by 14:35, just 8 points by 15:35. A market that priced in a wide range before the bell was pricing almost none of one by the close. Options positioning around the edges stayed almost eerily stable while all that was happening. Put call volume held near 1.1 the entire session. Open interest ratios sat around 132, both reading neutral sentiment start to finish. The call walls stacked overhead. 7,800, 7,900, 7,925, 7,950, 8,000. Never moved an inch. The put walls underneath 7,415, 7,515, 7,525, 7,530, 7,700 didn't move either. Max Payne sat parked at 7,650 all day without budging. The only thing that actually moved was the wall dealers were defending and the range they were willing to price around it. Here's the mechanics of it. Dealers went into today already short gamma and short delta, and the wall they'd normally lean on for a level to defend spent the entire session decaying underneath them, from 7770 down to 7740. Add the zero gamma line vanishing off the board at 11:35, and you've got a setup where dealers weren't managing a level anymore. They were just absorbing whatever came at them. When a wall crumbles like that and dealer delta never comes back positive, the tape has tended to stay compressed until a fresh wall builds somewhere else. That's a pattern about the mechanics, not a forecast for tomorrow. Worth watching whether a new wall forms above spot or whether this stays this thin. On the scoreboard, one call logged so far, and it hasn't been confirmed by the next session's data yet. The system sitting at 0 of 1 so far. No dressing that up. No overstating it either way. Tomorrow's open either rebuilds a wall above spot and the implied move widens back out, or this compression runs further with dealers still leaning short. That's the open loop into the next session. Watch the mechanics, not